In part, it has. When you look at their guidance for raw material inflation, they moved it up to 350 million, up from 250 to 300 million for the year, which is a pretty big move up. And a big part of that is related to the tariffs and the rise in steel. And Mark Bitzer on the call did say that steel prices in the U.S. are 50% higher than they are in the rest of the world. That said, they did drive pretty strong price mix throughout North America, and a big part of that was their ability to push price in their washing machines and across their other product lines.
But did he express any regret about being supportive of tariffs in the first place on washing machines?
You could definitely see that he expressed some uncertainty around what kind of an impact tariffs will have going into the second half, and it's definitely having an impact on margin. And again, it's still too soon to see what's going to happen, but definitely positives and negatives for all.
There could be a double whammy here. Housing sales and mortgage apps, the numbers have been trending downward over the past 3 months. Is that a worry for them? Is it a worry for you? Yeah, so I mean, existing home sales have been trending downwards. For me, since the beginning of the year, I saw it as something as expected. At 5.5 million existing home sales last year, we're looking at probably a good 500,000 homes above what traditionally the U.S. economy does. And I think one of the main reasons for that is new home sales has been much lower. So when you look at overall housing demand, you've seen higher existing homes offsetting some of that smaller supply in the new home sales. They're going down now, right? They are going down, a little bit. But average selling prices are still strong. Repair and remodel demand continues to be high. That would help Whirlpool. Absolutely will, yeah. It would. You redo your laundry room, you bring in new stuff. Yeah.
And theoretically, I mean, if the housing boom was about 10 years ago, the replacement cycle you would think would be kicking in anyway for all of these machines.
That's right.
But in terms of North America, I mean, is blaming higher input costs and things like that, I mean, is that just an excuse for actually just losing market share in North America? I mean, their volumes are down sharper than the overall industry, right? In
absolutely. So the big question with Whirlpool has always been their ability to hold margin versus holding market share. And it's pretty clear from the outcome that we just saw that they are losing some market share despite them driving aggressive price mix. They need to find a better balance in terms of how they can drive that. But if you look at the first half, shipments are flat. And even though Q2 was down, and the 1% to 2% full year shipment growth, I think is still a reasonable expectation.
So is 14%, the decline of 14%, which is very sharp, is that a decline? Is that a show of what their business is doing? I mean, if you took out the impacts of tariffs, would you still see a decline in Whirlpool shares today just because the business is slowing down?
I think you would see a decline, and a topic we haven't talked about is Europe.
Yeah.
I think their European struggles have been more persistent than they originally thought, been higher in magnitude, and it's going to take a little more time to turn that around.
If they're losing share, who's gaining?
I would say LG and Samsung are probably gaining some share.
The ones that are getting hit with tariffs in this country?
That's right.
But European, they wouldn't be affected by that, obviously.
Right.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.